mixed this afternoon. Treasuries rallying after the release of the Fed minutes.
The question is, what'd you miss?
U.S. stocks are hovering near all-time record highs. We speak with one technical strategist who says a 4 to 5% pullback does appear likely.
Plus, Fed officials were divided in July over the urgency of another rate hike. A former Fed staffer breaks down the language of the FOMC statement.
And Cisco shares fall on reports the company will cut up to 14,000 jobs. Cisco earnings also out in just minutes.
We begin with our market minutes, and it looks like U.S. stocks have managed to finish higher. They were bouncing around the last couple of hours here after the release of the Fed minutes, but it looks like we have overcome earlier losses, with utilities rallying to offset declines in those retailers following the release of the Fed minutes, which Joe showed a split among officials.
Yeah, we were down earlier in the day. Both treasuries and stocks were down, and then both immediately snapped back after that. Minutes indicating a perceived dovish bent.
I have actually a chart of stocks, not and treasuries, but stocks in the dollar, represented by the Bloomberg Dollar Index, BBDXY Index on your terminal. The chart is 2807, and what you can see is that the S&P in white was down before the minutes, and the dollar was up before the minutes. After the minutes came out, the dollar fell, and the S&P rose, which would signify that investors took from the minutes that maybe a rate rise isn't as imminent as as our talk about Bill Dudley makes it sound. The interesting, I think, and I pointed this out earlier with Oliver or Michael Regan, or no, it was Matt Boesler, is that financials continue to rally. Take a look at this IMAP here. You can see that utilities are the biggest gainers because a weak dollar is good for that. But then financials are big gainers as well. Not nearly as big as utilities, but the second biggest leading industry group. And that's interesting because if the Fed doesn't raise rates, a lot of people would say net interest margins will never have a chance to expand.
Some interesting things going on in the government bond market. Let's start with U.S. government bonds. Portuguese government bonds. Yields jumping on the 10-year lately. There's concern that DBRS is back. The ratings agency could theoretically downgrade the bonds, raising questions about Portuguese government debt and whether it be eligible for ECB buybacks. That's a story to watch. You don't see bonds.
DBRS is the ratings agency.
Right.
Okay.
So this crops up like every couple of months.
I know, and so now it's back, and you see that sharp move, but just back to where it was a few days ago. And then 2- and 10-year yields, they were higher earlier in the day, but ending lower after that perceived dovish Fed minutes, which pushed back expectations of a rate hike.
And of course, we have to talk about the dollar as well. It fell after the FOMC minutes showed that the officials there were split. You're looking here at euro dollar. Did take a big leg up versus the dollar, the euro that is, and it's given back some of those advances. Nevertheless, it's trading at the highest level since the Brexit vote, since June 23rd. The other currency I wanted to mention here is the Korean won, falling the most today since the Brexit vote. It is actually the worst performing currency, expanded major currency, that is, today. And you can see that line up at the far right. That's the dollar rising in value event versus the won. The won has really been on a tear over the past 3 months as foreign investors have been bidding up those higher yielding assets like the won.
And one commodity to watch, let's take a look at an intraday chart of gold. Kind of not surprising, that spike there at 2 p.m., ultimately not changing much on the day. But you kind of imagine that on a day when the stocks are up and bonds are up and everything's up because it looks like the Fed is going to be on hold for a little while, you got that initial pop in gold.
All right, those are today's market minutes. Let's take a deep dive now into the Bloomberg. You can find all the following charts using the function at the bottom of the screen. So I'm taking a look at the data out of the UK. The latest hard data show the labor market fairly resilient in July. Unemployment held at 4.9%, the lowest in a decade. Wage growth is holding up. This is UK jobless claims, or job vacancies. It's actually moving down after reaching a record back in January here. And this indicates some caution, increased caution on the part of companies when it comes to hiring in the run-up to the Brexit vote and certainly in the aftermath of the Brexit vote. And according to the UK's Institute for Employment Studies, this kind of trend, along with other surveys showing investment intentions are weakening, could represent the early signs of a slowdown in recruitment.
So we're finally getting the hard data, and it's not falling off a cliff yet necessarily, but the signs are starting to show up.
And it was kind of there beforehand, too.
Yeah.
So.
Yeah, people were saying that some of the data was already starting to turn pre-Brexit.
And they would be looking at this, yeah.
One of the big themes in markets lately has been the underperformance of yield and safety plays, and so you really see that in utility stocks, which are both good for dividends and perceived to be safe. This is a chart of XLU, the utilities ETF, versus the S&P 500. And that ratio is down about 10% from highs made in June. So obviously so much of the investor enthusiasm for much of the year has been about anything that pays a dividend, anything that's not volatile, anything that's safe, not risky. And that sort of peaked in June, and lately it's been selling off, and this ratio sort of demonstrates that nicely.
Certainly has come back well today.
It did get a bounce back today. That is true.
Cisco's out, Scarlet.
Yep, Cisco just reported, and what we have here is fiscal fourth quarter adjusted earnings per share of 63 cents, and that is better than what analysts were anticipating, which was 60 cents. Also an improvement from the same time last year, which was 59 cents. As for revenue in the fourth quarter, fiscal fourth quarter, $12.6 billion, higher than what analysts were looking for, but this does represent a drop from the same time last year. And as a result, you're looking at a third quarter of revenue decline for Cisco, as Abigail was telling us earlier. In terms of the outlook for the first quarter, it's looking for anywhere from 58 to 60 cents per share in earnings. The consensus estimate is 60 cents, so this looks a little bit lighter than anticipated. Gross margin, so profitability here at Cisco, at least in the quarter that was just ended, 64.6%. The consensus estimate was for 64%. Cisco, like so many of the other old tech companies, have been shifting towards more services and software, which is higher margin.
Something to note there, Cisco saying it's going to cut up to 5,500 jobs. A layoff announcement was expected, but the report had said 14,000 jobs could be cut. So assuming that this is the extent of the announcement, that is obviously less than what that report had said. Nonetheless, 5,500 job cuts at Cisco. You see the stock down to about just over 2.6% after hours.
And just more detail on those job cuts. This action will begin in the first quarter of 2017. So given that we've just reported the fiscal fourth quarter numbers, presumably it's taking place right now in the first quarter. The restructuring will focus on security, Internet of Things, data, and cloud. And of course, I feel like Cisco's been in restructuring mode for quite a long time.
Yeah, they just keep cutting and cutting and cutting, as you showed from that function. Loss go 9 job cut announcements since 2008. Let's bring in Bloomberg's Corey Johnson in San Francisco to talk about tech companies permanently restructuring. Is this one of those companies, Corey?
I don't think so. I mean, if you look at what they've done with job cuts in the last few years, every year they announce a few thousand job cuts, but the employment numbers actually go up at Cisco. So this seems to be the way they sort of take a whack at things. Now, companies, of course, the SEC is paying more careful attention to non-GAAP numbers. Non-GAAP numbers try to often exclude those restructuring costs. But if they cut 6,000 3 years ago, and they cut 3,000 2 years ago, and they cut 2,000 a year ago, that's kind of the comparison here. But the employment at Cisco continues to go up. So that's a part of what we see coming out of Cisco. The numbers, as you mentioned, are pretty much in line with what the expectations were, and pointing out that we've had now 3 consecutive quarters without any growth, or really 4 quarters now without any growth from Cisco, and that's bad news to be sure.
As Scarlett mentioned, Cisco, like every other legacy tech company, wants to get into trendy things like the cloud and so forth. How are they doing on that front?
So Cisco is very much an enabler of that. I should correct what I said. They went from 0% growth to negative 1% growth to negative 2% in the quarter that they just reported. Importantly, they got rid of a big video business. So they say on a year-over-year basis, if you took rid of the video business that they got rid of, that actually revenues would have been up. But Cisco is very much an enabler of what happens in the cloud. The problem is in that it's selling switches and routers and things that companies use to take information off of the cloud. But the fundamental problem for big hardware slingers, and it's seen much worse at some of their competitors, is that companies don't have to set up all of their own systems anymore when they can go to the cloud and use computing and use the very latest stuff coming out of Amazon Web Services or Microsoft's Azure or Rackspace or even Google with its nascent cloud business, its cloud hosting business. And you can see the pain that the hardware makers feel if you look at year-over-year sales numbers. So before we got these numbers today, we put together a chart that shows comparing Cisco to IBM, Hewlett-Packard, Dell. IBM, Hewlett-Packard, Dell, all faring much worse in this new sort of cloud-driven economy. If we pull up that chart, we can see those numbers and how bad that has been for those other companies. Cisco doing better but are still facing that same problem.
I don't know about your chart, Corey, but I made a chart that I thought you made a really important point, and I think we should say that again. Cisco continues to add to headcount. So even as we announce job cuts, if you check out the chart I just threw together on the Bloomberg, the blue line here is total headcount going all the way back to 1990. So even though we have, 25 or 30,000 job cuts announced since 2008, they continue to add more and more people to the payroll. Where are they cutting from and where are they adding to? Because this is a growing company as far as headcount's concerned.
Yeah, I mean, the company has had, as every year goes on with Cisco, and it's been the case for a decade, they have had more of a focus on software and more of a focus on security. So those are the kind of things we'll be listening for in the conference call is how important those things are. In particular, the software-defined network, so important that they're selling now switches and routers where software can actually devise out different parts of a network and run multiple networks on a single device. That's a very hot area in routing right now. We'll be listening in for what they've got to say about software-defined networks.
And of course, Chuck Robbins, as CEO, has now been in place for just over a year. Has he put his imprint on the company, Corey, or is this still very much John Chambers' Cisco?
I think it will always be John Chambers Cisco, at least for a very long time. John's still the chairman there. But, Chuck's going to do things in his own way. And I think that one of the things that's the opportunity is there, at least for these layoffs, is for him to decide where he wants to cut, which parts of the company he's going to leave strong and which parts he's going to sort of starve by cutting employees.
All right, Corey, thanks very much. Corey Johnson there talking to us about Cisco, out with earnings, beating estimates, and saying it will cut 5,500 jobs. But as Corey points out, this company continues to grow as far as headcount, so adding jobs as it cuts away. Tomorrow, don't miss Cisco CEO Chuck Robbins. He's going to sit down with the Bloomberg Go team at 9:30 a.m. Eastern Time. That's 6:30 a.m. out on the West Coast, and he'll be able to talk more about the results and the headcount.
Coming up, as the earnings season winds down, is the stock market more vulnerable to a pullback? Our next guest says it could be a buying opportunity. Stick around, we've got the charts. This is Bloomberg.
I'm Mark Crumpton. It's time for your first word news. American investors have lost considerable confidence in Donald Trump. According to a new Bloomberg Politics Morning Consult poll, registered voters with money in the market narrowly picked Trump over Hillary Clinton 42% to 40%. In June, Trump led 50% to 33%. The cleanup continues in Louisiana after devastating flooding. The Red Cross says more than 1,000 disaster volunteers have been mobilized from all 50 states to help in the flood relief efforts. The cost of the relief operation is expected to top $30 million. At least 11 people have died in the flooding and tens of thousands have lost their homes. The Red Cross says it's the worst natural disaster since Superstorm Sandy. The African Multinational Joint Task Force says it killed at least 27 alleged Boko Haram militants trying to cross into Nigeria from Cameroon. Eyewitnesses say at least 50 heavily armed fighters tried to get in hidden among the herds of cattle when they were ambushed by task force soldiers. Amnesty International says close to 500 people have been killed in Cameroon by militants since last summer. Japan is developing a new missile military experts say will force a reset of Chinese military strategy around the disputed East China Sea islands. That's according to the Financial Times, which reports the surface-to-ship missile is designed to, quote, complicate enemy planning and would have the longest range of any built by Japan. The Times also reports Japan will seek funding in a budget request to be submitted next month. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. Joe, back to you.
What you missed? Stocks climbing to fresh peaks this month, boosted by better earnings. The gains have pushed the S&P 500's valuation relative to future earnings to the highest in more than a decade. Our next guest says prepare for a downdraft as earnings season comes to a close. Katie Stockton is the chief technical strategist at BTIG. So, we've had this awesome rally. You think maybe it's time to get a little nervous?
Well, I think so, just for about 4 to 5% for the S&P 500, and that to me would be healthy. Like you said, we've seen an awesome rally, and we certainly had a nice catalyst from earnings season. With the removal of that catalyst, I do believe that we're more vulnerable to a pullback, and that could be driven in part by short-term overbought conditions. There has already been a loss of momentum. It's hard to see it in the S&P 500's level itself, but it has manifested itself in my indicators. So.
Yeah, we have a chart from you indicating that momentum is fading. We have it on the screen. The momentum is down at the bottom. What's going on there?
So
what's the momentum indicator?
That chart is actually longer term. So the longer term chart shows improved momentum, but within that scope, we have the deteriorating short-term momentum. But that's an important point because the improved momentum is coming on back of the breakouts that we saw in July. So the S&P 500 reached a new all-time high.
So does that mean this pullback of 4 to 5% sets us up for a buying opportunity if the long-term momentum is improving?
That would be the idea. So as soon as we get some relief from the short-term overbought condition and really a new catalyst to add exposure, that's when we want to revisit stocks that had already broken out in July. So in a way, it should be a gift from the market to get a pullback because the risk-reward becomes a bit more compelling closer to support levels.
As an aspiring chartist, I appreciate your art here. And I also wonder about how important the RSI indicators are. We've been showing all day this emerging markets chart that looks great. But here, if I look at your oil chart, I see a lot of times you can get into an oversold situation, which is what you see on the bottom panel there, that doesn't really result in a climbing price, which is what you see in the top panel there.
That's right. So to me, overbought, oversold measures in general are very important. So I always advocate somebody just chooses one. So the RSI would be a great example of one. I tend to use the stochastics. I would say just use one, don't use both, because then you're going to choose whichever one is saying what you want it to say.
But you can get out of, my point is, you can get out of an oversold situation without having the price rise, or you can get out of an overbought situation without having the price fall, right?
Absolutely, especially in a trending or strongly trending environment. So an overbought, oversold measure will have less validity in one of those strong trends. Crude oil and a lot of emerging markets don't happen to have those strong trends yet, so they are reacting to what were intermediate-term oversold conditions based on the weekly bar charts that we follow.
And is that confirmed by any other indicator in other asset classes?
It is. So if you look at something called the DeMark indicators, Tom DeMark is one of your third-party providers. A lot of the DeMark indicators
and a frequent guest, in fact,
flashed counter-trend buy signals at some of these lows. And at the same time, what we've noticed is actually a pickup in sell signals on a short-term basis for the equity markets.
So there's been a lot of controversy and a lot of debate about the direction of the dollar. We have a chart here that I think uses Ichimoku clouds, and I have to say I don't know what they are, and I've asked people and I've never had them explained. So I'm very excited that you're on set and that you built this chart. What are they, and what are they telling you?
Well, I don't want to get into too much boring detail, and don't make me pronounce it.
Just conceptually.
I call it the cloud model, and it tends to hold a lot of relevance for currencies because it is so widely followed there in part. To the extent that these indicators become self-fulfilling, that's fine with me. I still want to know what they're saying. It's a long-term trend-following device. And when you look at the dollar index, it's actually rolled over relative to this cloud-based resistance. And it shows that the range that it has been over a long-term basis really could be distributive for the U.S. dollar, meaning that we could be entering more of a prolonged downtrend there.
I want to just, earlier Scarlett and I were on with Chris Hyzy from Bank of America, and we were talking about the RRG function on the Bloomberg. And actually, it coincides quite well with his picks for sectors. He likes tech stocks, he likes healthcare stocks, and we see those are these two sectors, the blue and the green, that are moving into a leading area, out of improvement into leading. You see utilities, materials, energy all moving down to weakening. What do you think about this RRG function?
I think the function is great, but I think the message is also great. So it shows more offensive positioning in this latest rally that we've seen in major indices. Of course, if you look at the daily version, the shorter term version of what you've just shown the audience, it does tell a different story and would be more supportive of a pullback. You have
I just put it up. You can easily get the drop down menu here and just nail it.
More defensive sectors are starting to outperform a bit, and that's more characteristic of a pullback. But I think the weekly, more intermediate term view does hold promise for the fourth quarter for more offensive positions.
If you look at in a daily sense, you see financials in among the leading sectors. And Chris Hyzy was telling us, you know, if you see the Fed start to move towards normalization, then he's going to have financials as a strong pick as well.
All right, Katie Stockton of BTIG, thank you so much for joining us today.
Thank you.
Coming up, what currency is the world's worst performer this month? We've got the chart that reveals the answer next. This is Bloomberg.
What's the value of capital? Well, what's it cost to modernize a school district? What's critical thinking worth? A basketball costs about $14. What does it cost to build a new sports arena? What's team spirit worth? A telecommunications system isn't cheap. What's it worth to talk to your mom? What's the value of one more tree, a forest, a walk in the woods? What's the value of art? Art open to the public. The value of capital is to create not just wealth, but things that matter. Morgan Stanley, capital creates change.
Scarlet Food, what you missed, the world's worst performing currency this month is Mongolia's tugrik. And you'll see here that it really correlates with the drop in copper prices. So the white line is the tugrik, but I inverted it. So you're seeing its moves versus the dollar. And so when the line goes down, it's declining in value. It's now dropped for 23 straight days, the longest losing streak on record, at a record low. And of course, this is as copper, which is a key Mongolian export, has been heading not south, but it really hasn't done very much after falling to a 7-year low in January. Mongolia also talks about how there's this slowdown in neighboring China, which is a big factor, but its own anti-investment laws and these inconsistent policies mean that foreign investors don't really want to do much with it.
Yeah, and of course, it was a couple weeks ago, Mongolia was warning about its ability to pay one of its euro bonds and difficult, like literally running out of cash. So that seems to be pretty clearly
drove the yield to like 24%, if I recall.
Well, the IMF is now in town to help advise on what they should do or how they should tackle some of these problems.
But getting no help from the copper decline.
Nope.
Speaking of emerging markets, there's an interesting note from UBS that argued that there's not really a fundamental recovery in EM and that it's essentially the rally we've seen is just part of this big yield chase. Here's a chart I made. The white line is the ratio of MSCI EM to MSCI World. So when it's going up, EM is outperforming. Obviously, it's been surging lately. And then the blue line is the Goldman Sachs Financial Conditions Index, which has eased a lot. And so it kind of, things go back and forth. So improving equity markets also end up improving financial conditions. But it does speak to this idea that perhaps some of this, at least a significant part of this emerging markets rally, might not really be about the improving economic fundamentals, but more about easier conditions and people just reaching for risk. So something to think about.
Liquidity is certainly helping.
Yeah, exactly right.
I'm looking at, I thought Target's sales, same-store sales number was interesting when you're thinking about the U.S. consumer, which is pretty much everything that's behind, as we know, U.S. growth, and it doesn't look good as far as Target is concerned. It's their first quarterly same-store sales drop since 2014. I've got the bar chart here showing you same-store sales. The white chart is the stock price, and the blue chart is operating margins, which I just thought would be interesting to throw in there. You can see that it's been a weakening picture as far as the same-store sales growth, decelerating growth, we can say, since the peak in 2015, and now they're down to negative, and the stock price also has come down.
And it's a pretty sudden drop as well there for Target same-store sales.
And overall, kind of a weak day for retail sales of retail stocks. One of the laggers of the S&P 500 today. Obviously, Target not helping.
That's right.
Coming up, Roberto Perli of Cornerstone Macro will be joining us to give us his perspective on the July Fed minutes. He previously had said a September rate hike was 50-50. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Hillary Clinton's on the campaign trail today and talking about one of the most incendiary issues in all of American politics, gun control. At a rally in Cleveland, Ohio, Clinton sought to reassure Second Amendment advocates that their rights won't be threatened if she becomes president.
I am not at all advocating the repeal of the Second Amendment. I am not at all advocating any program that would in any way take people's guns away. Here's what I'm advocating. I want to help you stay alive so that nobody who shouldn't have a gun in the first place gets one and hurts you or other people.
Clinton also reacted to news that her Republican rival Donald Trump is shaking up his campaign staff, saying that Trump can hire and fire anyone he wants, but he's still the same man. President Obama has been briefed on developments in Louisiana as massive flood relief efforts continue. The White House says the president spoke with the FEMA administrator today and ordered the agency to, quote, utilize all resources available to assist in the response and recovery. More than 70,000 people in Louisiana have registered for assistance under the federal disaster declaration, with at least 9,000 having filed flood insurance claims. 60 miles east of Los Angeles, a monstrous wildfire has forced more than 80,000 people to evacuate their homes. Several buildings have been destroyed, but the exact number of losses isn't known. A fire official who flew over the affected area today described the blaze as devastating and said many families will come home to nothing. There will be new security measures for this year's Oktoberfest in Germany. Munich is banning backpacks and other large bags from the beer drinking celebration. A fence will be erected, and the number of security guards will be increased from 250 to 450 at times. Last month, Germany was rocked by a series of attacks. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet, back to you.
Thank you so much, Mark. Let's get a recap of today's market action. The Fed minutes were released, and it showed that officials were split on the strength of the labor market. So what it did was basically quell some talk that rates could rise in September. So as a result, we saw stocks give up earlier losses, not that the losses were very big, and finish higher. The Nasdaq really little changed at this point. Yeah, and a key development today at those Fed minutes. Prior to those, we had seen stocks down. We also saw yields were higher. Yes. Both of those reversed after those Fed minutes.
And I think one of the most interesting things, when you're looking at stocks this year and last year, indeed, two of the major issues driving stocks are central bank activity, whether it be the Fed or another central bank, and the price of oil, right? I mean, the price of oil hasn't been as in focus lately as it was, say, at the end of last year. But if you take a look at this chart that I found on the Bloomberg, it's 2811 if you want to go into the BTV library. You can just type Matt Miller, and it'll autocorrect for the BTV library, by the way.
Show off.
You'll see that U.S. crude output has surged, and indeed it's the biggest surge that we've seen, 152,000 barrels in the week ended August 12th, since 2015. Now, if you follow, for example, the Baker Hughes rig count, you'll notice that it's been up, I think, 7 of the last consecutive reports, and people are going back into the shale, the Chesapeake sale notwithstanding. So it's interesting to see that the output continues to grow, or is starting to grow again, I should say, even at these low prices. Whether that puts a cap in the price of oil, is something that people warn about. I just try and use as much gasoline as I possibly can on the weekend to do my part for the market.
What'd you miss? A battle over rates continues to simmer at the Federal Reserve. Our next guest says the July Fed minutes contain many different and at times contradictory views. So what are we to make of it? Joining us now is Roberto Perli, co-founder and partner at Cornerstone Macro in Washington. Explain this. What were the contradictions in the minutes?
Well, thank you for having me. There were a number of contradictions. There were a number of conflicting messages, as you said. But first, I think it's important to say that there was one very clear message. And the message was the forecast that FOMC members had not changed since the June meeting. Why is this important? Because in June, if you remember, the dots suggested that everybody, literally everybody, wanted to raise rates this year. Therefore, if the forecasts haven't changed between June and July, still, as of 3 weeks ago, everybody wanted to raise rates this year. So that much is clear. The confusion arises as to the timing of this move. Is it going to be September? Is it going to be December? And as you said, the minutes were completely unhelpful in discerning that. But I think I would focus on the main message, and the message is a rate hike this year is probably still a very good base case.
And of course, with all the Fed officials that have been speaking this week, whether it's Dudley, whether it's Lockhart, trying to keep September in play to give themselves some maximum optionality, as the term has become called. What kind of risks does the Federal Reserve inadvertently create when it tries to preserve this optionality?
Well, I think it creates a risk of damaging its own credibility, right? So if they try to keep an option alive for too long and then they keep not doing what they threatened to do a few weeks before, obviously the market doesn't particularly believe them, right, or believe them less and less over time. I think you see this in part from the probabilities that the market attaches to a move in September, which are fairly low, right? So nobody believes, especially in the equity space, that the Fed will move. I think that's a consequence of the fact that the Fed tries to keep the option open, but that doesn't follow through.
You know, it's interesting, Roberto, when we hear John Williams talk about the neutral rate and where it should be maybe lower, when we hear Hans Redeker told Scarlet and I the other day that we need to nurture this inflation baby so that we can get something out of it, that nobody ascribes any probability to a Fed cut or to more QE. Why do you think that is, that no one thinks the Fed will act even to loosen policy even more than it is by just not raising rates?
Well, so I think the Fed would ease policy if there was a chance of recession. At the moment, that's not the case, right? It can always happen, but at the moment it's not evident, at least. I think the neutral rate is a very important concept, right? It's important not because it calls for an easier policy. It calls for a much more gradual pace of rate hikes, right? So they have been thinking about this fact that this neutral rate has been low for now about 7 years. Fed always hoped that the neutral rate would come up over time. The productivity basically would increase. Of course, the recent data don't support that. And now finally, after a number of years, the Fed is admitting that maybe the neutral rate is stuck for a long time at a low level. If it is, it implies two things for policy. One is that the terminal rate was as high, the final level of the funds rate where the Fed can go, it's not 3%, as the recent dots suggest. It's probably close to 2%. And second, the pace to get there is going to be even more gradual. So not 3 rate hikes per year, as the dots suggest, but probably 2 if we're lucky.
There's been a lot of interesting discussions about the future of monetary policy, what we really know. Obviously, San Francisco Fed President John Williams came out with a note on Friday proposing some new ideas. St. Louis President Bullard has been talking about some new ideas for a while. Do you see any signs that these rethinks are starting to seep their way into official communications? Or if not, do you expect them to? Do you expect them to gain more influence and to start guiding policy more?
Well, what I think is that Bullard, especially Williams, started a debate. So this is a debate that is probably going to continue for a very long time. So I would put it in terms of years, not weeks or months, right? So start talking about it today. So there are very difficult, complicated issues that affect not just the present, but the next at least 10 years of Fed policy. So they're going to take their time and think about it. It's good, I think, that this debate takes place because obviously what has been done so far has had less of an effect than the Fed thought on the economy. And so circumstances change. As William said, policy should change. But they want to be careful in not rushing to conclusions. And so this, we're going to talk about it now and start talking about it now, and we'll continue for a couple of years at least.
So put this all together, Roberto. How does Janet Yellen address this new paradigm that John Williams is proposing at Jackson Hole late August? If she says too much about it, what kind of signal might it send to the markets without her intending to rattle people?
Well, I don't think Janet Yellen would want to go to Jackson Hole and endorse nominal GDP targeting or on increasing the inflation target. That would be something that requires a broad consensus inside the committee, and I don't think there is one at the moment, so I don't think she will do that. I think what she could do, and she has done already in recent press conferences, is to refer to the fact that the neutral rate, as we just discussed, has been very low, and so there is a growing chance that it will stay very low for a long time, and so that implies a slower pace of tightening than the Fed indicated in the past. So I think that she can do much more clearly than she has done so far, and she probably will.
Will she talk about the way the Fed interacts with banks in the financial system? We've seen more of that in Europe, more direct interaction, especially in their quantitative easing. Obviously, we don't have a program, anything like that. But do you think that that'll be part of the discussion?
Probably no, in part because, well, first of all, it's a delicate subject, but second, Europe is in a different situation, right? They're still doing QE, the Fed is not. So I think there is less of a need to address that subject at this particular time in the U.S. I wouldn't be surprised if Yellen actually touches on that.
All right, Roberto Perli, co-founder and partner at Cornerstone Macro, thank you very much.
Coming up, Clinton versus Trump. A new Bloomberg poll reveals which candidate investors prefer for their portfolio. This is Bloomberg. I'm Scarlet Food. It's time for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Cisco is planning to cut 5,500 jobs, or about 7% of its workforce. The move underscores the company's struggle to adapt as a shift in the networking industry towards software-based systems has undercut sales growth. Cisco says it plans to put the cost savings into businesses such as security, data center products, and the cloud. Meantime, fourth quarter earnings per share of 63 cents beat analyst estimates. Russia is delaying its planned sale of its stake in regional oil producer Bashneft. No word on when the proposed $5 billion deal, Russia's biggest asset sale in a decade, will move forward. Moscow hoped to sell more than half of the company as early as next month to help plug its budget deficit. This follows the collapse of crude prices, which pushed the economy into its longest recession in 2 decades. And Aetna warned antitrust officials more than a month ago that it would pull out of Obamacare's government-run markets for health insurance if the U.S. tried to block its $37 billion merger with Humana. In a letter to the Justice Department that was obtained by Bloomberg, the company's CEO says a challenge to the merger would impair the insurer's ability to keep providing plans under the Affordable Care Act. And that is your Business Flash update.
What'd you miss? Republican presidential nominee Donald Trump's stock is dropping. At least according to a new poll from Bloomberg Politics and Morning Consult, voters with money in the market narrowly picked Trump over Clinton, 42% to 40%, as a candidate who would be best, I should say, for their portfolios. That's a stark contrast from a June poll where Trump led investor confidence by 17 points. For more, let's go to Bloomberg's White House editor, Alex Wayne in Washington. Alex, thanks for joining us this afternoon.
Sure.
What is it that's going on here with Trump? He seems to be losing momentum this week. Is that something I'm just perceiving, or does that shine through in the polls as well?
No, this latest poll on investor sentiment pretty much mirrors all the other polls of everybody else's sentiment. He's sliding everywhere. What was interesting to me about that poll is that small investors, people with less than $50,000 in the market, were more likely to support Trump than large investors.
Today we got the news, obviously, that Trump is shaking up his campaign, that the guy who is running Breitbart is now the CEO of his operation, of Trump's operation. And the interpretation that everyone had in that is that, okay, Trump is really going to focus on his core base, the sort of angry populist type, and not try to expand his operation at all, perhaps to the sort of people in the middle. These sort of investors that we looked at that we're sort of polling in there. Does it look like Trump is doing anything to appeal to that demographic?
I think smaller investors are probably more likely to be in the Trump demographic than larger investors. This is purely my opinion, really, but I imagine that larger investors are more likely to be kind of the conventional mainstream Republicans that might have joined the Never Trump crowd, or at least don't like their candidate a whole lot. And smaller investors are probably more likely to be base supporters for Trump. So he might be doing the right things for them.
But is it, so what we're seeing then is that ultra high net worth individuals feel more comfortable with Hillary Clinton. Is that because you think Wall Street, the status quo on Wall Street will remain with Hillary Clinton in the White House?
Yeah, I kind of suspect that Wall Street is pretty much pro-status quo for the most part, and I think that's likelier under Hillary Clinton than under Donald Trump.
Well, one ultra-high net worth individual who clearly supports Donald Trump is Carl Icahn. And if you come inside the Bloomberg, under the function Elec Go, E-L-E-C Go, you can see the U.S. Election Special Report. And at the bottom, there is the video section where you can see Carl Icahn's conversation with Eric Schatzker. Alex, when it comes to Carl Icahn, Eric was trying to pin Carl on whether he would form a super PAC to support the candidate. If Carl Icahn does move forward with something like that, which he wouldn't comment on, would that make a difference? Would it move the needle in any way?
I don't know. I think there's already at least one super PAC backing Trump, and he's had some problems in the past with kind of super PACs that purported to back him working at cross purposes. It might be better off for him if Carl Icahn were to join forces with the existing super PAC on his side and put his money there.
One piece of news in addition today, it looks like Trump is finally going to hit the airwaves. He's sort of famously been avoiding TV ads so far in this campaign. Yeah. Do we have any idea what kind of message he's going to send? Is it going to look like conventional TV ads? Is it going to look more like his Instagram videos? What do you think we're going to see from that?
You know, now that Steve Bannon's in charge, I think it's almost unpredictable. Our Trump reporter, Jennifer Jacobs, tweeted this morning that the ads sounded pretty conventional. They would bash Hillary and try to puff up Trump. That's pretty much what any candidate does with their ads. So I don't know what the CEO of Breitbart has in mind, though.
All right, Alex Wayne of Bloomberg News, thank you very much.
Thank you.
Still ahead, does Hyundai need to team up with tech companies to survive? Why the Korean automaker is talking to Google. This is Bloomberg. I'm Scarlet Fu. What you missed? Hyundai is now seeking to transform its go-it-alone strategy and become more open to tie-ups with tech upstarts and Silicon Valley giants. And that includes a possible partnership with Google for autonomous vehicles. Let's discuss with Daybreak Asia's co-anchor Betty Liu. So what kind of discussions have they had? Like, what kind of partnership are we talking about here?
I mean, it's preliminary right now, and I feel like I need to defer to our auto guru here about Hyundai, right?
Hyundai.
But look, it's lonely being just one, right? And so this appears to be what Hyundai has been faced with, which is they've had a go-it-alone strategy for so long, right? That they've said everything that we're going to build, all of our, whatever it might be, whether it's new models or technology, they're all doing it in-house. But now it seems, with this rapid momentum of self-driving cars and technology and everything we're throwing into our automobiles, they can't be alone anymore. So, according to the president of Hyundai, he is now the company's having some talks right now with Google.
Now we're showing a Toyota here, which hardly seems fair.
Well, the partnership's not there yet, right? So
right.
You have to show the.
But Matt, that makes a great point, which is that Google has partnerships with several auto companies.
Sure. I was just thinking Fiat Chrysler, for example, has a partnership with Google.
Exactly. So, it raises the question of who needs who more, and clearly right now it's the Korean automaker that needs perhaps Silicon Valley more.
Surely that's the case with all of the automakers that work with Google. They need Google much more than Google needs them. And I mean, customers are clamoring for Google's technology, even if they don't work together in self-driving cars. For example, Porsche and I believe Audi, which are obviously luxury automobiles, are now putting Google Maps in their car navigation systems because customers that could spend a lot of money were demanding that technology as opposed to everything else that wasn't working.
Which makes perfect sense. But my understanding, though, is Hyundai has been trying to be much more technologically savvy, and they've been able to integrate the Apple. The Apple system, right? Exactly, CarPlay into their models. In fact, I think you can also retrofit their older ones quite easily and quickly and cheaply.
If only CarPlay were more useful. Apple CarPlay, this really grinds my gears. Apple CarPlay only allows you to use Apple Maps in the navigation system. And so if you're used to the brilliance of Google or Waze, which have so much more data and allow you to avoid traffic, then having to fall back on Apple Maps is a real bummer, and you end up just using Waze on your Apple phone.
That brings up an interesting point. If Google does team up with Hyundai in any way, does that mean that it won't or it'll limit whatever cooperation it has with a company like Apple?
It's a great question. I mean, I couldn't answer that at this point, right? Because we don't.
It doesn't for Fiat. It doesn't for Fiat. So Sergio Marchionne, the CEO of Fiat Chrysler, has said, we're happy to work with Google, and it's a great partnership for us to have, but we're still open to our partnership with Apple because Ferraris also use Apple CarPlay in LaFerrari and some of the other products.
I think it also underscores the point that we just made earlier, which is that these car companies need these tech companies more than the other way around, so they can't really demand that exclusivity.
Do we know, or has it been clear when these cars finally get commercialized, particularly the self-driving ones, what the business split is going to look down, what kind of revenue Google will get, or is this still just very speculative in terms of what it'll mean as a business at this point?
I'm still skeptical about self-driving cars by 2020? Is that what Ford is saying?
2021, that's what Emily Chang got out of Mark Fields from Ford.
Okay.
I think the day before yesterday. It's a great story, and I got to say, Adam Jonas, who's an analyst at Morgan Stanley, and Ravi Shankar, who works with them, the two of them have been kind of at the forefront of this research, and they've been saying for a long time, you're going to see this first in urban centers. You're going to see tech companies partner with car makers to create, pods that take you from the airport to the hotel, and then it's going to spread from there, and it's going to come sooner than you think. So I could talk about this all day long, but we don't have all day long.
But you see, I see that in a contained system, but just not. I don't know about mass adoption. That's the big question.
We're gonna find out together, Betty. You and me together. Thank you so much. You can catch Betty with Yvonne Mann at 7 p.m. New York time this evening, 7 a.m. Hong Kong time for Bloomberg Daybreak Asia, which you can always watch on the Bloomberg terminal as well. I encourage it. It's a fantastic program.
All right, coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg. miss this. China releases July property prices tonight at 9:30 p.m. Eastern Time.
And don't miss Walmart earnings tomorrow at 7 a.m. on Bloomberg Go.
And I'll be looking at always at U.S. initial jobless claims tomorrow at 8:30 a.m.
That does it for What You Missed. Thanks for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
Donald Trump has shaken up and expanded his senior staff with just 3 months left until Election Day. Overnight, the Republican nominee added 2 names to the top of his campaign org chart. One name is familiar to WADR viewers and to pretty much every TV news watcher across the fruited plain. That is longtime Republican pollster and strategist and Trump and Pence advisor, Kellyanne Conway. She has been promoted to the position of campaign manager. Here is what Kellyanne Conway had to say about the move on Fox News this morning.
It's the busy home stretch to Election Day, and we just need to sort of beef up the senior level roles in a way that we are, dividing and conquering. I think what he doesn't like is people telling him exactly what to say and how to do and how to look. Maybe that's Hillary Clinton's game. What did the focus group say? Who should I be? What do I believe? How do I say it? I kind of picture her in Brooklyn, Martha, saying to the staff, listen, I know that the country doesn't like me and doesn't much trust me. I never want to hear it again. How do we win? And so that's not our dilemma. And the fact is that with Donald Trump, he is still his own best messenger because people see him as very authentic.
So that's the campaign manager, Kellyanne Conway, newly minted, and she's being joined at the top of the Trump campaign by a guy named Stephen Bannon. He has had more gigs than an Avett Brothers summer tour. He's worked as a Goldman Sachs banker, a Hollywood investor, a Navy officer, and until recently, the head of the conservative news website, Breitbart. He's leaving Breitbart to become the Trump campaign's CEO. Meanwhile, Paul Manafort, who is the campaign chairman, who replaced Trump's campaign manager a few months ago, will stay on in his current position. The campaign manager who Manafort ousted was Corey Lewandowski. So, what does CNN analyst Corey Lewandowski think of these latest developments?
You've got a candidate who wants to win. This is a clear indication of that. If you look at Stephen Bannon and what they've built at Breitbart, it's win at all costs. It's very important that Kellyanne is with him as often as possible. She's an excellent person when it comes to message development. She's done this for a long time. She had a very successful polling company. She also brings a sense of calmness to Donald Trump. So her being on the plane is something I think has been lacking, which is that senior leadership on the plane for the last 2 months.
So Kellyanne Conway and Bannon join at the top of the Trump campaign, Paul Manafort. Why is Trump making these changes? What does it mean?
Well, he's making them, of course, he's losing. The definition of insanity is continuing the same behavior, expecting a different outcome. He's found his ultimate kind of brand match, if you will. He wants to go back to where he started, which is the outsider, which is the flamethrower. He's had to post-primary kind of nudge with the Republican Party. I got to play a little bit. I got to try and pivot. You could see he's not comfortable. It's not working. And he's doubling down. I mean, Breitbart, we're going to talk more about Bannon, is the ultimate outsider, revolutionary, throw flames. It's us versus the establishment. It's us versus you. That's Trump's message. They're coming together. He's doubling down on Trump being Trump.
I don't know what Bannon's going to be doing in this campaign. I'm still trying to figure that out. Paul Manafort is not for an establishment message. He's for a message of change, fundamental change, revolutionary change. And Kellyanne Conway, while she also supports the change message, is someone who is part of the Republican establishment. She can claim she's not, but she's worked for the Republican National Committee. She knows, leading members of Congress. I don't know how much this marginalizes Paul Manafort. He's still the chairman. Everyone I talked to today said he still has, obviously, a huge role in the campaign. To me, while the press wants to turn this into a shakeup, they're woefully understaffed. They now have two senior people who have Trump's confidence trying to help deal with decisions. And I will tell you, if Kellyanne Conway really gets on the plane with Trump, goes to events and keeps him focused, I don't care what the downside is for Trump's chance of winning. That improves his chances of winning.
Well, I think this is a good move for him. And both of them have the same, I hate to use this word temperament, same tone as Trump. You could see, we talked yesterday, we were showing a clip of Trump giving a speech, and I said, just look how uncomfortable he looks. These are his kind of people. Yeah. And he's backed in a corner now, and he wants to come out. Because, we had Kelly on the other day, and she walked up, it was the first time I met her in person, I was like, whoa. She knows how to pivot in a second. She's tough.
And make stuff happen.
She's tough. She's aggressive. And, I disagree with just about everything Bannon stands for, but the guy's an animal.
And he makes stuff happen. I think what Trump wanted was two people around him who could say stuff to him that makes sense to him. He trusts their judgment. Now, again, he's known Kellyanne Conway a lot longer than he's known Bannon. I think he's taken a little bit of a risk. Once again, just as he did with Manafort, bring in someone he knows, but not knows at the fingertip level of whatever you say goes. He trusts Kellyanne Conway. She has not been on a lot of winning presidential campaigns. I'm not sure she's been on any in a big role. I don't think she has. But she's worked in politics for a long time, and she understands the product. She understands the Trump product.
What still scares me a little bit as a possible future commander-in-chief is that, and Kellyanne even said this to me the other day, he needs a certain person next to him on the plane.
Right.
This is our president. I want to know that if that person calls in sick that day, the reel's not going to go off. So that's a big concern. I don't believe Barack Obama or H.W. Bush or W. Bush literally needed someone by their side.
Bill Clinton in 1992 ran an anti-establishment campaign. He criticized Democrats in Washington and Republicans, and yet Democrats were loyal to him because they said, this guy can win, and this guy has a message about change that we believe in. This team could help Trump do that. Not saying it's a brand new day going to change the whole race, but this does give him two people who he has confidence in on sync and message.
And who he likes, you could temperament-wise likes hanging out with.
Exactly.
Just hours before the world found out about Donald Trump's non-pivot, the Republican nominee gave a teleprompter speech at his rally last night in Wisconsin, where he took sharp aim at the Washington elite and embraced the outsider credentials that helped him get this far.
I'm not part of the corrupt system. In fact, the corrupt system is trying to stop me. The leadership clash in Washington, D.C., of which Hillary Clinton has been a member for 30 years, has abandoned the people of this country. When we talk about the insider, who are we talking about? It's the comfortable politicians looking out for their own interests. It's the lobbyists who know how to insert that perfect loophole into every single bill and get richer and richer and richer at your expense. The insiders also include the media executives, anchors, and journalists in Washington, Los Angeles, and New York City who are part of the same failed status quo and want nothing to change. They don't want it to change. The media donor political complex that's bled this country dry has to be replaced with a new government of, by, and for the people.
Okay, Mark, let's assume Kellyanne is on the plane with him every day, can keep him on message, effective message.
It's unfortunate for Trump that he made these personnel changes, which are getting a ton of attention, the same news cycle of that speech. Because I know you and I both think that was maybe his best speech of the campaign in terms of a message that can win. I'll say again, I don't want people to overinterpret my words that somehow I think Trump's the front runner now or all of a sudden he's even in the battleground stage. But that message is a message that Democrats have been worried about that Trump would get onto. It's about change. It's about not just criticizing the New York Times, but lumping in all the big establishment forces in the country and saying, people, if you're happy with the way things are, vote for Hillary Clinton. If you don't like big media, big government, big business, vote for me.
I want to talk about the psychology, the hypocrisy, and the effectiveness or non-effectiveness. First of all, the psychology. What he is simply doing there is repackaging the Muslim ban and the wall to a much more socially acceptable thing, which is simply you find hopefully a large enough group of people who are not happy with their lot in life, and instead of now blaming a Muslim or an immigrant, you blame, here's the group: politicians, media, hedge funds, Wall Street investors, lobbyists, the city of Los Angeles, city of New York, city of Washington, journalists, and you basically
lump popular stuff on that
exactly
list.
And Beyonce, I don't know anything left, and that's the lot in your problem, and that's the psychology. The hypocrisy of it is today, front page of the New York Times is a story about Donald Trump, billionaire, who, as he was taking shareholder money as they were going downhill and he was taking money out, he got a $25 million tax deal with his buddy Chris Christie, all lumped into there. A New Yorker, a billionaire, working with Wall Street, working with a politician. The ultimate hypocrisy. He's at the epicenter of everything he's running against.
And when Trump drove this message in the nomination fight, you had Republicans make that case. It'll be even a stronger general election case. And you're right. The Clinton people will turn on a dime on how they're going after Trump. If he starts to get traction saying, I'm the outsider who can go to Washington and fix it, they will say, you had lobbyists in Washington. You had special sweetheart deals.
He's the poster boy.
You are the poster boy for government using your money to leverage to get benefits from government. He'll have to fight back against that. But again, that message compared to what he's been talking about since the convention,
I think it's too little. I think it's too transparent. And I think the people he's having trouble with, the swing people, the suburban Carters of Philadelphia, the suburban Carters of Washington, D.C., and women are not going to bite on that. That's really doubling down on the people who are already there, and I think it's very, very transparent.
I think at a minimum he consolidates the Republican base, and I think he may be able to get some Democrats with that message if he keeps it up.
We'll see at Breitbart. With Breitbart, if he consolidates the Republicans.
All right, when we come back, we're going to learn a little bit more about the new executive at the Trump campaign, who comes from Breitbart, after these words from our sponsors.
What's the value of capital? Well, what's it cost to modernize a school district? What's critical thinking worth? A basketball costs about $14. What does it cost to build a new sports arena? What's team spirit worth? A telecommunications system isn't cheap. What's it worth to talk to your mom? What's the value of one more tree, a forest, a walk in the woods? What's the value of art? Art open to the public. The value of capital is to create not just wealth, but things that matter. Morgan Stanley, capital creates change.
As we said, at the center of this latest Trump campaign shuffle is the former Breitbart executive Steve Bannon. One of the more interesting nuggets from Bannon's past is that as his fee for brokering an entertainment deal several years ago, he apparently nabbed the royalties